Hello. This is a weekly review. I'm going to try to do one of these every week, and if I can't, then it's probably like the least important video series on the channel is just kind of like looking back over the current price action. I'm more interested in reviewing like the authentic content straight from the source. That's basically like the Romeo 2023. And I'm more interested in kind of like really pulling apart like large catastrophic losses, because that build up behind, you can, when you take a retail trader and you put them into a situation that causes them to move all their chips into the center of the table and go all in, so to speak, go full port, to use that slang, and then lose. And so I'm more interested in those two video series. So the first one is Romeo CRT 2023 review, and the other one is Please Fix Thanks, that I'm doing on this channel. But I'm going to stick these in here. And it's going to be, obviously I'm trading day in and day out. So it's based on my own trading. Actually really, so this week I'm not going to really mention my own trading as much, just stuff that I stuck in my journal and kind of filed under the journal it and catch it next time. So just a thought that I had this week, and this is just I don't have a chart to go along with this, but this is just a quick anecdote. I really wanted gold to start to trend higher this week. I had this week picked out for that, and I'm actually seeing that it might be next week, because gold hit some new lows this week. It might even be the last week of July, or it's the kind of the July into August. So you got to be patient when you're operating on the higher time frame, but just remember that a higher time frame turtle soup and having that play out is always more important than lower time frame market structure shifts. And in terms of my model, if you've waited that those 10 candles, that's those 7 to 12 candles of accumulation into manipulation, and then you're waiting for the 3 candles on average of distribution, then in those 3 candles of distribution, if you're on the lower time frame and you see market structure shifts the other way, and the market will give you those. So let's say it's like a bearish distribution and you see these lower time frame market structure shifts. Those are in fact just little miniature turtle soup ranges playing out that then lead into further moves lower. So that you can't, a higher time frame turtle soup always beats a lower time frame market structure shift. So this is a really interesting trade I saw on Friday. It kind of manifested in crude. I actually want to get to this later. I'm going to go to FX replay, and I want to show you the euro. So in a lot of ways, the euro was like one of the least interesting markets this week, but I just thought it was so interesting because it's primed for, so this is it on the weekly chart. On the weekly chart, you can see that we've been in distribution, and you could argue, I'm not sure where. Yeah, it's a little awkward because, the euro is an awkward chart, for sure on the larger time frame. I mean, you could argue that we are in we are in accumulation on an even higher time frame in the euro. That's a pretty safe thing to say, right? Rather than, yeah, I mean, looking at this is interesting too. Because if this is some sort of distribution into these lows, which actually already got hit, in June. Aha. Okay. So that makes more sense. Okay. So anyways, yeah, we're in accumulation. And here's what you can see on the daily, which is really interesting. So the model that I look for, that if you've watched me analyze the Romeo 2023 charts, it's Monday, Monday the 14th, July 14th of this week, you can see that model essentially ripen, because if you kind of term this as like an origination candle. So in other words, if this is the candle that gives you cause to start to focus in on a range accumulating, and I like this candle because it attempted to break out to the upside and it gave us this like long wick, and there's just a lot of awkwardness with this candle, because to me it's plainly obvious that this candle's got buy side liquidity and sell side liquidity, both draws on both sides. And the other funny thing about this candle to me, and this makes it a good origination candle so I could almost start categorizing these setup before the setups, or these models, into different buckets, right? Because there's one style that essentially forms due to an awkward candle that becomes the result of a pause CRT. And because this really is a bearish CRT, it's the most pausiest of pause CRTs, and that's what these all are. So in other words, like this is the CRT high, and then you've just got this drip lower. And let's just start counting. So if this is candle number 1, then this is going to be 2, 3, 4, 5, 6, 7. And notice how on the 7th candle we haven't really gone anywhere. So it's here and this is so even though we're on the daily chart, we're only here on the actual day. So wait, that's Monday's candle. Oh, I must have skipped a day. Oh no, it's because the Monday daily candle in the euro. Let me just check what time this is. Oh yeah, good. I got a little bit thrown off. So the daily candle opens at 5 p.m. on the previous Sunday. So yeah, so this is basically what I'm expecting is, and just by like following the following the standards of an approach, of this approach, just from having gone through all the 2023 models and just looked at this approach of, is that we're going to get some sort of inducement. This will be like an inducement low on Monday, and then we'll swing up, and I guess it's kind of like the Judas swing, or basically it's the kiss of death. It's a kiss of death entry here, bearish, one last time, even though we've been dripping lower. We get one last kiss of death entry, and I'm expecting it to hit this low to clear that low there. And why is that so important? Well, that's important because and let me move this up a little bit, because it actually needs to hit precisely there. That's the low of that origination candle. And I know we're on like a really awkward time frame. We're on the 8-hour time frame. So like we're breaking all sorts of kind of, we choose the time frame based on the model, not the model based on the time frame, if that makes any sense. Like we have an expectation and we choose the time frame, and then we watch it to play out, and if it does play out, then we know that we have a very high probability of getting our distribute our 3 candles higher. So that's what I'm expecting headed into this, is that these 8-hour candles, you get like kind of like a, it might take 24 hours, which is 3 8-hour candles. But you might get a little bit of a push lower, and then a big kind of inducement push up, because it's like, oh look, we cleared this low, But this isn't the important low to clear on this Monday. This Monday manipulation, Monday into Tuesday manipulation, the opening range manipulation, you could call it, right? Okay, so let me just play this out. So there it is, making the low. And then when the next 8-hour candle opens, I'm expecting it to be like a bullish candle with like a fat body. And that's going to create that false market structure shift. I know that like the pound had like an amazing week last week, and then the euro wasn't really favored. The euro was kind of stuck in its range, though the pound did make a reversal as well. So the euro has been kind of playing second fiddle in the forex, as far as like those two funding currency majors go, but. Yeah. So there's so it's funny how that actually turned into a bullish candle. So it's like very, very deceptive price action right now. Like luring in early bulls, luring in people who looked at the charts all weekend and they saw, are they a trend line trader, and they're like, look, it's a trend line. I don't know. I don't really draw trend lines other than to note LR. But yeah, really, really good pump off of that. Like this was a CRT. Well, not really. I don't know. It's a really awkward. Yeah, but we even get into premium. Like we hit the midpoint of this range. The market makers are having fun with this one candle. This one candle has created all this. This playground. I'm going to probably, since we're on the 8-hour, I could probably just let 5-minute be my replay time frame. Okay, so here it is. So at this point, you even have people who bought here because there's plenty of systems that show, they're anticipating the breakout and their stop losses are here. Yeah, I mean, I've seen a popular algo trader on YouTube who actually literally makes profit. He literally has like a profitable strategy doing this. Like he literally will buy the top of this range with his stop loss here, like turtle trading, like the original turtle traders. But he does it algorithmically, and it only has like the algorithmic edge. So he needs to put in like 40,000 euros to make like 2,000 euros a month or something like that, but it's still eking out a profit. Anyways, let's watch this Kiss of Death play out. And by the way, Kiss of Death Turtle Soup on the 8-hour time frame. Turtle Soup, that candle, high. And we might need another candle to open to like get the full doji. Yep, okay. Nice. Boy, and the way that bearish candle, just the menacing nature of it, that it really just engulfs. It literally is an engulfing candle of this little candle. It's not the previous, but it's this N+2 here. But I want to just remind you about the light bulb from PowerPoint, right? It's just that if you're a bear on the euro and you see something like this, this is what the model preys on. Higher time frame turtle soup will always beat out a lower time frame market structure shift. So this is the lower time frame market structure shift as we clear, we go bearish for the first time because price is finally trading down below the low of this candle. So that means it's gonna That means it's gonna break out going lower, and there's just nothing but air down here. There's nothing but air down here. Aren't you so excited to be bearish on the euro? It's like, no. Over the next 24 hours, which is 3 8-hour candles, price should rally. Price should rally to the high. And I'll give it 4 days. 4 8-hour candles. My text was huge. I was working on for a different video. So pretty easy to track here. And this is, so if you're in this trade and you go long here, or you know what, we should go just for to be good sports here. And I hate how the numbers don't line up with the candle wicks. Like, what's that all about? I'm sure there's like a hotkey you press so that you can like manually. Do you press shift? No. Anyways, I'll figure that out for one of my future videos. But anyways, let's go to the lower time frames. So if a 15-minute chart, or if a 15-minute signal for a 4-hour, right? It's a 30-minute for an 8-hour. So let's go look for like a model number 1 or a it's not this high we're looking for, because that was the turtle soup. It's this high. So this is ultimately our range target. And so notice this isn't really a CRT. It is a CRT. It's an extremely delayed CRT. And maybe that's a good name for this. I've been kind of struggling with like what to name this model, because Romeo, he didn't really have it. I don't think he explained it to public or surface level private traders. Like, oh, I'm doing this in 2023. I'm sure he did, but like on my, from what I've been able to get access to, it's basically just, here's the charts, figure it out, which is fine. This is what I'm doing. So yeah, let's look for a model number 1. This looks like a great candidate for an order block. And I remember back in the day, the order block, you'd actually look out for an FVG. So like since it's a large fat down close candle, or it's a type of FVG is a gap jump between. That's a weird. I wonder if that's a bug in FX Replay. Anyways, that's pretty good. So can we retest the body or even just the wick? Yeah, we did. Look at that. So we have an FVG, we have a retest, and you're in. And so, obviously I could do like trade, all that, but we're gonna expect some sort of consolidation here, and you could take partials. Like you could say like this swing high, which is actually, you know what? Let's use an FVG. Let's stay a little conservative. Let's use this FVG. So, if you're trading this, and you like, let's say you've got, okay, I only trade futures. I've got 6E futures for this. You're on a 250,000 funded account, and I try to risk like maybe 3 contracts on 6E on a trade like this. Why am I only risking 3? Because it's such a large range. It's a 92 pip range, which is, if in the options world, that's essentially like the weekly expected move for I'm just recovering from a illness, so I'm a little bit like slow. It's a weekly expected move for the Euro USD future Euro USD Forex options. So anyways, really large range. You could, but it's kind of cool with the whole. You you could be pretty aggressive with your stop loss. You know, you could say like, hey, I'm only going to risk 16 pips to make, well, let's make it a fact. Let's make it a ratio here. So an even 5 gets us there. Yeah, so 18 pips. 18 to make 92. Sounds pretty lucrative. So we might get a little drawdown, and that's okay. We are in the 30-minute time frame, and we're trying to catch a move that's taking place over an 8-hour candle analysis frame. You know, I see this as another chance for entry too, because I mean, this bottomless bullish candle is one of these, like, it just screams to me like that this is like this awkward candle with this draw on liquidity there, that sell side draw on liquidity. You know, so that little wick there, I would be with this, like this low in the range, I'm happy clicking that. The other cool thing is like a breaker. So if we do get a little bit of retracement, I don't think we will. We've had a lot of impulse and not a lot of FVGs on the 30-minute at least. So we'll keep cruising forward. Oh, look at that. That's awesome. Oh, good. So it did hit the breaker. So right there, so here's your wick. So this is like, if you're, I think of like, I remember, you know, it almost looks like how do you catch this? Like, it reminds me of those really skilled barbers, and they've got that straight edge razor, and they're shaving somebody's face, and they're running along their face, and they're like, they've already done a good job, and they've shaved their face, and they're just getting the last little bit of stubble off, and it's like, bang, got the last little stubble. Just to catch an entry like that. It's very impressive. It's really impressive. But then you get the breaker, so we have a really solid, I mean, this whole doji of indecisiveness, that's 30 whole minutes you had in the London session to hit that breaker, and just to be like, buy, accumulate. Well, so I'm saying accumulate in terms of your actual portfolio, accumulating longs, 6E longs. So then we'll watch for an FVG entry on the 30-minute time frame. Wow, so that was a news release. Tuesday was CPI day. And you know, it's funny, I used to be like, this is one of the drawbacks to just trading with like no reference to the higher time frames, is I remember approaching CPI days, and I would have such a good track record on some CPI days, because some CPI days would give you the swing right at the last moment. Like, they'd give you that peak manipulation like at 8:15 a.m. But because the euro is this global currency, it sits right between NY and Asia, you know, in terms of time zones and in terms of trade. And there's a little bit more egalitarian with the way that they've given the true whales, you know, you know, I hate to, the term smart money, the term insiders, the term market makers, you know, it's like, but whoever is lucky enough to buy here or skilled enough to buy here, you know, I always am surprised sometimes when you see a swing, and then sure, the NY traders get your New York and AM, you know, ICT calls it the kill zone. You get your kill zone entry, and your kill zone entry should be, so who's on the hourly? I'm just looking at like, yeah, so it's like cool, it's kind of this cool order block here. You know, it's this, yeah. I'm just trying to, I'm kind of at a loss of words how to describe this one, because it's not quite a swing low, but it does fit as an order block, a bullish order block. A propulsion block, you could use that. So yeah, so the 7 a.m. traders that they don't get access to that daily margin leverage, until 7 a.m. They have to click buy there, which is actually not that, we're talking 20 pips, difference, or maybe 15. But yeah, so this is kind of funny. I always this is the setup for the kiss of death, right? So we'll go back to the 30-minute because it hasn't closed yet. I'd like to stay on the 30-minute just to keep it consistent. So here, this is where you want to start looking for kiss of death entries. And just given how aggressive everything else with this trade has been, we might trade back into the premium, or sorry, back into the discount, but we just might not. We might just explore and then blast higher. So we did trade just there. We traded back into the discount of the range. Wow. So now start looking for longs, right there. And so that low that first touched the discount is the subject of a turtle soup. And so if we can see a little bit more bullish progress after that. Now, if the news is released here, then we might be into this range drift range. And then this might be a chance to look for another one of these fractals, right? So in other words, another delayed CRT off of an origination range or an origination candle. This one would actually make a good origination candle on this time frame, though. I think just snapping to a time frame and expecting there to be one of these, I haven't had very good luck with it. I've had better luck looking at the chart and kind of puzzling over my head and clicking through the various time frames and thinking about if this were a wave function, what would the period of the wave function be, and then what time frame fits that, such that we resolve that whole 10 into 3 type of paradigm. It's kind of funny, this original FVG that I drew that works well as the partials, the area to kind of get out, with your partials. It actually works really well as a kiss of death entry as well. In this case, it might not be that in all cases, but just lucky coincidence there. Yeah, and so kiss of death is a more patient way because it's very predatory. What's happening here is they need time to engineer bearish inducements. And so trading kiss of death, the CPI candle itself is the inducement here, right? Sorry, it's not the inducement. It's the origination. And look, we've already exceeded my standard. So in other words, CPI popped off and this one candle just kind of got the market so and this, what, I think maybe I had my high picked out wrong, or maybe maybe this is a sign for next week, but yeah, so this is one of those maybe the pound cleared its respective whatever range it was locked into, though I did say that the pound was trending. I haven't really looked at it in this context. Yeah, so I think there it is. So that's kind of funny. Yeah, so how many candles was that? So you can't call that candle number one. So we'll call that candle number one in the not in a CRT context, in my distribution. So Am I in the right time frame still? 1, 2. I think I was fooling myself before. Oh, it's okay. I apologize. 8 hours was a little bit too low of a time frame. But the fact that it follows this structure means that there's a time frame that does work. So you'll just have to bear with me here. So 23 bars. So I'm off by perhaps as much as a factor of 2. So is it 12? Is that the one that they wanted? Yeah. Yes, it is. This is a 12. This is yeah. So even though it was the 8-hour candle low that caused the and you know what's funny is this candle, if this becomes, I was hyper fixated on that 8-hour candle, but it's just this open, and it's these two candles here that form it. And so really, like, your origination candle, like, I'm still, you got to have some flexibility with this. And I allow myself a lot of flexibility, but I think it's this idea that if, like, I guess you could call this candle number 1, right, of the accumulation into manipulation. Yeah, and that is 15. So we're still a little, we're still, even at 12, we're still a little, north of where I'd like to be. So it really is the daily. Oh, yes, it is the daily. Yep. So we've got 1, 2, 3, 4, 5, 6, 7, 8, 9. Well, let's, purely for my own edification, now that we know that this is the daily, we're actually a little bit aggressive with our signal time frame, because our signal time frame should have been the hourly. And so we did get our 2. So really we're expecting 1, 2, 3, 4, 5, 6, 7, 8. Yeah, we're expecting, it's an 8. It's an 8 candle setup. So we're expecting, again, 2 to 3, and we get 2. So rather than being disappointed by, it's going a little slower, I actually should be happy, because we were in it before the close of the second day. We tagged it. So let's go to the 1 hour, and we'll re-examine what we can see. Do we still have a 1 hour model number 1? Yes, we do. So we have, this is still the order block. This little gap, and then the nice aggressive retest still makes us happy to get in there. Talk about a teeny tiny little area where you're, and it just goes to show how ambiguous this can be. So you really have to be flexible. Your level of precision when you're on a range like this, you have to be a little bit more flexible when you're on the lower time frames. It really isn't scalping. 181 hour bars. So yeah, so we stab there. Same idea of a breaker entry, with this being the breaker. That being the breaker. Same idea there. And then I was looking for an FVG entry, an obvious FVG, and the problem, is that they're likely, if this were an organic, and I'm referring to organic because I think that news events are like the GMO of Catalyst, of trading Catalyst, where it's like, if you have like if you have like an organic momentum build where it's just like orders were put in and more orders were put in and volume was put in and more volume was put in, and it's just like this rising tide of one-sidedness, bullishness or bearishness, right? Then you likely see an early FVG, an early measure of confidence. But of course, because this is pre-CPI, you see this super awkward, this very trend envelope here. But anyways, yeah, we do tag that. And yeah, it's funny. So the kiss of death is like another, it's just another little mini version of one of these on the 2-hour chart, isn't it? Like where it's like, we don't, obviously you can't treat this as the entire range, but you can be like, okay, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, right? So it takes 12 2-hour candles to finally hit that FVG. Maybe it's a 4-hour. Yeah. So 4-hour, we get it on the, if this is candle number 1, we can count at 1, 2, 3, 4, 5, 6, 7. Yeah, love it. So this is a 4-hour range entry, like a kind of a 4-hour, like where this is the origination candle. And of course, we're not tapping into the low of this candle. We're tapping into something a little bit more obvious, which is this bullish FVG that formed, right? We need to eliminate this, and we're still in a hurry to hit this. We're still in a hurry to say, like, to in air quotes, react to the CPI information being released. So yeah, that is the full breakdown of what I saw was a pretty cool example this week in the euro. And just to leave you with another kind of fun puzzle or just fun thing that I noticed, let's go back to PowerPoint. A higher time frame TS always beats a lower time frame market structure shift. Okay, so yeah, what I teased in the very beginning of this video, it's kind of funny how markets have a wait and see button, and it's the flag, right? So in other words, things are so uncertain geopolitically with crude. Romeo is quite certain. I think that he had a tweet. He literally tweeted like days before the wick entry, and then he tweeted again. I think it was in the run up to this week. So in other words, here's his tweet here, which wasn't the wick entry of the current resurgence of crude. Like crude had already bounced off the lows quite a bit to get here. I think the lows were like in the high 60s. So he tweeted again and he was like, could you imagine if crude was at all-time highs? So we have literally got like 2 call outs. Like I'll probably look back on them and I'll probably be like, oh, look, like that was the wick entry there. He's calling out. This was the FVG entry, but besides that, it's kind of funny that when they hit pause like this and they accumulate and it makes this clear kind of origination range, just as a kiss of death is formed from one of these models, one of these kind of like delay CRT models playing out because of, it's fractal, right? Well, when you go from a kiss of death it's like when you go from trend and then there's a slight accumulation, and that accumulation forms the setup for the kiss of death itself, which the payoff for the kiss of death is just a punishing distribution into the actual like final target of the higher time frame context target, right? It's working a little bit like this here, where there's actually a as soon as this wedge, like this candle here, if you kind of, turn off your brain and say that let's ignore everything to the left of this candle just for now, and you just count. This is candle number 1, so it goes 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and 10 is the manipulation, and we turtle soup that low, and then we distribute quite quickly to this high, to the true draw on liquidity. 1, 2, 3, 4, bang. So and I think it's if you count this as a manipulation candle, then it's 1, 2, 3, right? 3 candles of distribution. We've blasted past both of those buy side liquidity magnets there. So and I didn't even do this justice. I think crude closed at 81.70. Like it just, things are crazy. I mean, I know I'm sitting here over the weekend and I'm thinking it might gap higher on Monday. So stay safe out there, everybody. Thank you for listening to